This is one of the most powerful strategy that we can use during earnings season to make us a good profit from the stock market. Now, earnings season is coming, and one of the powerful strategy that a lot of seasoned investors has been using is called sympathy play. Now, what do I mean by this? Let me show you the charts of the banking sector. You can see right here on the charts, I've mapped over several big banks. You can see JP Morgan as the main chart. You can see this is the candlesticks price movement of JP Morgan. I've also mapped over Bank of America, Citibank, and Goldman Sachs. If you observe, you can see they move in tandem, meaning to say whenever the banking sector goes down, all the big banks, their prices goes down, and when it goes up, it goes up. They almost mirror each other. This is called sympathy trades. When one big player of that sector moves in a particular direction, the rest of the similar sized players move in the same direction as well. So how can we use sympathy trades to our advantage? That's very simple. Most of the companies, they do not announce earnings on the same day. Let's dive into the banking sector as an example again. You can see for this current earnings season, JP Morgan announced earnings on the 12th of July. They surprised the market positively with better earnings and better revenue. And what happens was their price went up. What we can do is take advantage of other banking stocks that has yet to report earnings. Example, Goldman Sachs and Bank of America. These are in the financial sectors, and there's a high chance that they will report positive earnings, making the prices go up as well. Let's take a look at Goldman Sachs and see whether that's the case. On the 15th of July, we can see that Goldman Sachs reported earnings, and as we have expected, they reported positive earnings and the price shot up. If we have bought Goldman Sachs a few days before, after JP Morgan announced their earnings, we could have made a profit in the stock market easily just like that. Of course, we choose stocks with good fundamentals, and this is an additional advantage for us to leverage on during earnings season. The next stock that we're going to eyeball is Bank of America, and Bank of America is going to report earnings on the 16th of July. So for those who are watching this video, let's check back and see whether they reported positive earnings. It's not a 100% guarantee winning trade, but we can see it increases the chance of us winning. That's because the other big players in the sectors has proven that this particular quarter earnings is positive. It's not just the banking sector, but other sectors also gives us opportunity for sympathy trades. Another example I have here is the oil and gas energy sector. You can see in the chart right here, I have ExxonMobil as the main stock. And besides Exxon, I have Chevron and also Occidental Petroleum. We can map over other oil and gas companies in this chart to see whether they follow a similar pattern. Not all industries works the same. Example, if we look at the electric vehicle industry, I have Tesla, NIO, and also BYD. This chart clearly shows that Tesla is moving a certain direction, while NIO and BYD has their own way of moving. So it's not a good idea to do sympathy trades for this particular industry. So make sure we check out the industry before we execute the sympathy trades. Do not just simply buy into a particular stock in a similar industry because the earnings is better. Sometimes the industry may not move in tandem. A way to screen for possible sympathy trades is to use this website called Finviz. This is one of my favorite screening websites. And if we go here, we can type a particular stock that we want. I'm going to use Apple as an example, AAPL. And once we take a look at Apple, and once we go into the charts of Apple, what I want to see is the particular description. Apple is considered consumer electronics. If I click on consumer electronics, Finviz will help me pull out the stocks that's in this particular sector. The next thing that I'll do is I will click on market capitalization. This will allows me to see which are the smaller companies and the bigger companies. So we can see at the top here, we have Apple, Sony, and LG. We can just mouse over and see whether the charts move in similar patterns. In this case, Apple's chart is a one-way ticket to the bank, while Sony and LG is moving sideways, a little bit more similar to each other. So it's possible we can do a sympathy trade on LG and Sony. Another sympathy trade idea that people like to do is to go for smaller caps company, because smaller cap companies typically are a little bit more volatile. So let's take a look at the oil and gas sector. Going to oil and gas, I will sort them out by market cap, and we can look at the smaller caps energy company. If we mouse over the top 3 smallest cap company, we can see that they are generally downtrend. This gives a possible suggestion that a sympathy trade can be executed using these companies. So looking at the company's earnings, anytime one of them report a better earning that quarter, we can do a confirmation by checking the second one. If it follows the first company that shows a good report and have a price shoot up, we can enter the third one then, leveraging on this possible sympathy trade. Overall, this is a strategy used by seasoned investors, and there are investors that specializes in this particular technique, only giving them more than 15, 20, 30% beating the stock market. Personally, I like to look at this as a bellwether strategy, where some of the key stocks will give me an insight on how the industry is doing, allowing me to adjust my position, either adding or even reducing for this particular quarter. If you've learned something so far, remember to subscribe and also comment on other strategies that you use during earnings season. Also, in our description, we have our Telegram group where you can join us for more Zoom sessions where we do live trading and share more insights. I'll see you around in the next video.